A Balasubramanian, chairman of Amphi, CEO of Birla AMC, he joins us now. And Bala, the AMC stocks have plunged. Everybody is now worried that the mutual fund industry will be hit substantially, and it's a major setback for schemes which have a very strong debt portfolio. What is your understanding of the new amendment to the finance bill, and how will this change life for AMCs?
So I think Nikunj, first and foremost, I must mention that this new provision has come as a surprise, given the fact that there absolutely no mention about this in the budget, whether it is related to the removal of long-term capital gain tax or the indexation benefit which mutual fund fixed income schemes have been enjoying for the last number of years. Therefore, it came all of a sudden as a surprise. There is absolutely no doubt on that, and even we never expected, given the fact that mutual fund industry play a very key role in both development of the equity market on one side and the bond market on the other side quite substantially for a very long period of time. And therefore, it came as a surprise. I also believe that the way the mutual funds have been playing the development role on the bond market, which I think is one of the most need of the hour for the country as a whole, in addition to the equity market, I would assume that upon making some representation, they may probably think about making some changes, though right now too premature to mention about that. Definitely is something we will remain hopeful. But I think one has to look at the entire bond market, the price discovery mechanism, and the funding of most of the need for Indian corporates and non-bank financial services. Most of the government-sponsored PSUs institutions, such as NABARD, NHB, and PFC, REC, they have been the large borrower in the market, and mutual funds have been the primary subscribers to this market, giving them money at best possible rates by way of helping them price discovery. At the same time, also the mutual funds have been playing a very large role in the government securities borrowing programs. Therefore, the importance of fixed income schemes in the country has been growing quite consistently. And from investors' point of view, this becomes one of the best asset class as alternate to any other risky assets that we may have, and continue to the large pool of growing needs of considered investors.
But
Therefore,
Bala,
it came as a surprise, no doubt. And something we'll have to just see, Nikunj, given the fact that
right.
how in the new world, assuming scenario it remains, and how one has to get positioned, because asset class doesn't go away from the importance point of view.
Okay. Bala, but some would also argue and say that, look, we should not be surprised at all. This is in spirit with the fact that the government is working towards simplifying the tax regime. All asset classes, they should not be prioritized. And right now, if you are in fixed deposit, if you have money in fixed deposit, you don't get a tax advantage. If you're putting in debt fund, you get a tax advantage. Now, for a fixed deposit owner or a fixed deposit investor, why should they not get the same advantage which a mutual fund gets? And then why should mutual fund get an advantage? So it is in spirit with what it just normalizes.
No, I think I agree with you. Of course, while point is right, Nikunj, I think one has to look at it the asset class up to different things. One, of course, when you go to the fixed deposit bank, there is a guaranteed return that comes in, and with of course whatever the guarantee that is being given under the protection is up to about 2 lakh rupees. Above that, anyway, you run the risk of on the FD as well. But at the same time, FD as an asset class gives you a fixed return, no doubt. Whereas a mutual fund that doesn't give you the guaranteed return, the mark to market is there. But yet, because of the large component of the portfolio is an accrual nature, therefore, from investors' point of view, it gives a longer term benefit. Those who are coming to the mutual fund, they always come to the mutual fund fixed income schemes after exhausting all their options, going for the FDs and other things. Therefore, this is something need to be kept in mind, because mutual fund, the capital gain tax is coming because there is a mark-to-market risk you take, instrument that you take on a various instrument that you take. It reflects on the risk that is available on those instruments in the portfolio in terms of valuation. Therefore, it has always been getting the tax benefit. That is one. Second is from the bond market point of view, I think there is one of the area where there is a huge effort that is being put by SEBI and Ministry of Finance, often they have indicated we need a vibrant bond market in the country in order to progress to the next level, in addition to the equity market. And who have been playing the bigger role in this? Mutual funds have been playing a bigger role in this for many number of years, for price discovery, drawing the yield curve, giving the money at the lowest possible rates in the market. The entire interest rate reduction that happened, the pass-through of the interest rate reduction largely was passed through the mutual funds assets, which was growing at that point of time. And that's the way the bond market got the significant benefit, reducing the cost of borrowing for Indian companies. Yeah, we became one of the alternate source of financing. And that cannot be taken away. I think it's unfair to link it to FD and other things. Therefore, we need to have uniform policy. But instruments have to be understood what role they play, and on what basis which the tax benefits are being given.
Sanjay Shah also joins us now. Sanjay, good morning. Thank you for joining us. Sanjay, in your understanding, what would be the immediate implications for debt schemes starting 1st of April 2023?
So I think definitely it's a shocker because nobody who expected the sudden change which came. But still, I think I'll reiterate that the debt funds of the mutual fund itself has their own advantage, like providing the significant liquidity. I think the basket of the instrument which you buy underlying schemes. So probably I agree as far as the tax arbitrage which was available has gone away. But if you look at the large asset which is there with the industry is in the bucket of 1 to 1.5 years, which are probably, you can talk about the liquid, ultra short-term and short-term category. They were never coming to mutual fund for the tax arbitrage. So all the corporate money which used to be managed by the fund houses will continue to remain there. But yes, I think it's going to be from the point of HNIs and ultra HNIs, it might be they need to look for some alternative.
Sanjay, in your understanding, how much of the schemes, mutual fund schemes currently, are getting inflows from institutional clients and HNI clients, and how much is coming from retail, pure retail?
So if you look at pure retail, has not been. I'll just give you a prudent example. Today, in my assets of, let's say, we represent the entire IFA community or the retail community. In my 57,000 crore of AUM, 92% is equity. So probably the retail has not came to date. It is always the institutional money, and institutional money where probably if you look at there is you can distribute into two buckets. One is short-term parking where they are optimizing their investments. So still I think the mutual fund is continue to remain a very good alternative. Now if the money is coming for a longer term, like if you look at the target maturity series, FMPs or the passive funds, there probably the people will start looking for the alternative. But still, if you now probably you can look at everything comes at par, right? You don't have any tax advantage. Now, if you don't have any tax advantage, still absolute return also possibility of the debt fund is very, very likely that they'll be able to generate better return.
What happens in this case? I mean, is it a clear advantage, FDs for that matter, equity saving funds, hybrid schemes? And then I want to talk about gold as well. But first, where do you think the money is going to flow into? Bala?
Yeah. I think of course, let us assuming this what has been done, it comes. I think it's going to get implemented. Naturally, of course, the alternatives will become the hybrid funds, arbitrage funds, and increasingly people would like to take more risk in the equity itself. In that sense, of course, the prominence of other asset classes will increase. Just to also add to the point what Sanjay mentioned about while corporates have been the large investors, especially at a time where when equity market turns extremely volatile, even from retail and HNIs investors' point of view, we have been, of course, dreaming that their own participation in the bond market had to go up quite significantly as part of their portfolio balancing. And that's something would remain one of the most sort of asset class from investors' point of view. But having said that, naturally, it will give an edge for funds like hybrid funds, which has got a mix of both equity and fixed income, would actually gain more prominence. But I think one has to still keep in mind, whatever the mark-to-market, the fluctuation would be there, which otherwise is there in the fixed income schemes as well. That is something one cannot assume that it will go away. At the same time, industry, of course, have to, of course, think about new way of building this business. Though at this point of time, when I compare that India versus US, and US bond market is as big as an equity market and catering to the growing needs of investors. Even recently, when, as all of us clearly remember, the recent crisis in the financial market in US, the one of the beneficiary in the US has been the money market funds who have been the large beneficiaries because they are the one have been giving the interest rates which are prevailing at this point of time to the investors compared to even the banks who have been giving the lower deposit rates to the investors. And that's the kind of role which is mutual fund have been playing, that true reflection of the market prevailing yield, which 100% actually goes to investors. And these are the importance, in my own belief, is cannot be taken away and kill one of the asset class which can play a very big role from investors' point of view, as well as from the bond market development point of view.
Sanjay, closing comments. Do you think suddenly
No, I think the
yeah, go ahead.
Yeah, it's a sudden change, and everybody has to absorb as far as mutual fund AMCs are concerned, distributors are concerned. But one thing I can see that the less than 5 lakh rupees ticket size in the insurance is now becoming again very, very attractive. Because the exemption, only product where you get the tax exemption is the insurance. So again, I think advantage is going in favor of insurance. Even in case of above 5 lakh ticket size, also now the mutual fund was enjoying the tax arbitrage, so that is now going away. So now mutual fund, otherwise, but if you look at mutual fund has its own strong advantage as far as management, liquidity, and the credit management is concerned. So virtually, after some hiccup, I think virtually will come back for sure.
Sanjay, Bala, both of you, thank you so much for taking the time off from your busy schedules and giving us all the perspective on what this really means. A sudden move at that, and clearly you can feel the stock market impact as well. HDFC AMC is now down 4.5%, Aditya Birla Capital down 3.5%. Even some of these, life insurance plays are the ones, I don't know why, still seeing an impact. But on the other side, it's mid-cap IT all the way, which is holding out very, very smartly after Accenture's commentary. Coforge, Birla Soft, LTIM, Persistent, these are all your big winners. In fact, within the Nifty as well, the smidge of a green is only within IT. Infi, Wipro, TechM, TCS, HCL Technologies. That's about it pretty much. But Kunal has been spotting some other breakout candidates, which we will address after this very quick break.